Well, if you look at Q2 of 2022, you might notice a slight change. And what is that change? Well, in the first estimate that you see, that's that upper portion of this image, you can see that Q2 2022 was a decline. It was a very slight decline, probably less than 1% at that point, but that has been updated to an actual growth figure. What's up, apes? Welcome back to another edition of the 𝗪𝗚𝗄𝗪𝘀 daily podcast of the day. Thank you all for joining us here once again on the world's most powerful and influential podcast. We're very glad to have you here. Fuck Joe Rogan. He has no idea what's coming for him. It is currently 7:46 p.m. on this beautiful Thursday, September 26th, 2024. So, of course, we appreciate you guys joining us here. It's been a relatively quiet week for markets, but it certainly is not going to be any more with the economic announcements that we have coming out tomorrow. We're going to be diving deep into the PCE report that's on its way at 8:30 a.m. Eastern time tomorrow, so expect that on Monday. But today we got a lot to focus on here. We're going to be discussing a lot of new announcements that just came out of Meta. Most of them are focused on how you can maintain your virginity for absolutely as long as possible. We also just got a huge update to GDP. Now, not for the most recent quarter, but for several quarters ago, we actually got an update to all of our GDP growth figures over the past 5 years. So we're going to be diving deep into that and why the August durable goods report is kind of spelling a bad outcome going into the holiday season, getting into Q4 here. Holiday season, Jesus Christ, it's not even Halloween yet. But realistically, Halloween is probably my second favorite holiday besides the 4th of July, obviously. But let's go ahead and get into what you guys actually wanted to talk about here today. So, the WSO Alpha portfolio. Now, I did happen to fire a bunch of apes yesterday, obviously, because they underperformed markets here. So let's go ahead and find out if anybody else is getting fired tomorrow. Absolutely everybody is getting fired again. So, the WSO Alpha portfolio is up about 14 basis points on the session. Pretty handsome return, definitely not one that you want to call your mom and brag about, but, at least you're going in the right direction. But not nearly as much as the NASDAQ. Now, the NASDAQ was up about 60 basis points on the session. The S&P was up about 40 basis points. The Russell 2000 up 53 basis points. And not that anybody cares, but the Dow apparently led the way up 62 basis points. Now, it is very much a stock picker's market, like we've been talking about here, guys. There's really no kind of inflationary pressures or bad news is good news kind of thing going on that's just lifting the entirety of the market. Now, we are going to be getting rate cuts, but those are arguably already priced in through the end of 2026. So, we'll see if those really have any kind of meaningful impact. Now, it would have a meaningful impact if we, say, expect a 25 basis point cut in November or we get a 50 basis point cut. But at least right now, if all goes according to plan and what the market is currently pricing in, don't expect a lot of volatility from the rate side of things. That's largely why we've had a relatively quiet week here this week. There weren't many huge macro announcements, of course, until tomorrow. Today, even the GDP data didn't really, there wasn't enough surprising stuff to move markets here. But of course, we still have to talk about it. Before we get into all that fun stuff, let's go over some of these banana bits. Now, there were some reports after yesterday. We talked about how OpenAI CTO 𝗪𝗦𝗢, she was the one who basically gave the dead giveaway in that interview that she did that OpenAI is training its Sora AI video product on YouTube videos. Basically gave that dead giveaway. She was one of the founders. She's in that really cringy picture of like Sam Altman, Ilya, her, and some other fucking loser when they're like sitting on a couch trying to look tough and smart. Or I really don't know what the purpose of that picture is, but she's finally gone and Sam Altman is officially the only person left at OpenAI in that picture of that kind of founding group. And especially, if we include Elon Musk. But there were rumors after Mira left that Sam Altman was going to be getting a roughly $10 billion equity stake in the company. He came out today and said to employees that is absolutely not happening. The guy seems to like to brag that he has a 0% equity stake, but he's also worth billions and billions of dollars. So either major conflicts of interest going, I don't really know what is happening here, but I have a feeling that the IRS is going to have a whole lot of questions. Okay, even more stimulus is coming out of Beijing, and it's lifting the shit out of Chinese and China-linked stock. Even a company like Caterpillar, which we think is red-blooded American as they come, made a new all-time high because of this stimulus. And apparently their product is pretty popular in China. So with this stimulus, they're expecting more industrial production, capital expenditures to be made from these companies. So that was lifting shares in this kind of heavy-duty equipment maker. Meanwhile, productivity growth is absolutely skyrocketing over the past couple of weeks. Now, this is easily the fastest productivity growth since 1968 for a Fed easing cycle. excuse me, usually when the Fed eases, you're not going to see that kind of a performance on the productivity side, but that is absolutely what we've been seeing so far. And according to the daily chart book, it is the fastest once again since 1968 when, what was that, an election year when, who won? Was that Nixon? Did Nixon win 68 or was that LBJ getting another term? No, that was LBJ because then it was Gerald Ford and then it was Nixon, right? Lincoln, Johnson, Kennedy, Johnson, Nixon, Ford. No, so it would have been Johnson to Nixon during that period from 68 to 72 right there. So the largest productivity growth for a Fed easing cycle since the Lyndon Baines Johnson administration. Okay, excuse me for that absolute tirade right there. But at the same time, New York Community Bank shares are ripping. Now, the company came out yesterday and said, quote unquote, the heavy lifting is allegedly over. I don't know if they think that the commercial real estate market is just fine now, and that's what's kind of driving that commentary, but either way, or they could be smoking crack or something, you know, we really have no idea, but either way, executives seem pretty fired up, and the market absolutely was today with the stock up more than 7%. Finally, DirecTV and Dish, these two have been flirting with each other like some, you know, socially awkward people in 6th grade for quite a long time now. They're finally, it seems like, actually approaching some kind of a deal that both parties could agree to, that maybe the FTC would agree to as well, but probably not with walking Aleena Consil on the position, who fucking hates any kind of merger. But these two are allegedly nearing a deal that's been in the works since I was a child, so we'll see if this can actually go through this time. All right, let's go ahead and move into our macro monkey big story of the day. This one, we are talking about the fake recession, of 2022 specifically. We all know evil, satanic, fake media has taken over the fucking liberal media establishment here in the United States. That's a joke, by the way, so don't freak out on me. You know, the people running MSNBC, Fox, CNN, it might as well be Bernie Madoff, Jordan Belfort, and Sam Bankman-Fried at this point, if it's just going to be this much fake news. We all know that this has been running rampant for quite some time now, but our beloved Bureau of Economic Analysis, the BEA, has fallen victim to the fake news media as well. The fake news mafia is really what we should call them. That's off the dome for you guys, but they have apparently fallen victim to the fake news as well, and we just uncovered this tragedy in today's GDP report. So before I unveil exactly what that tragedy is, let's go ahead and talk about what the report actually says and does. So, in case you guys don't remember, the Bureau of Economic Analysis, on a monthly basis, they will estimate the GDP growth rate for the prior quarter. So in this case, we're estimating the Q2 GDP growth rate, so the period from April until June of this year. Now, they come out with their first estimates at the end of July. This is the quote-unquote advanced estimate. That was at 2.8% growth for the quarter. Then they come out with another one in August, and that's where they start to estimate corporate profits as well. And they said actually it was 3%, once they had a little bit more time to count. They're a little bit slow, counting all these beans over there. And then they do another one yesterday at the end of September. So this is what they do on kind of a rolling quarterly basis. And they came out and said that yes, real GDP, in fact, did increase 3% for the second quarter. That is absolutely correct. But they thought they were going to sneak one past us over here at the Daily Peel. Everybody knows you can't sneak one past the most powerful and influential podcast in the entire world. But if we look at this chart, this absolutely heinous chart that's going to remain that way until the end of October, when we get the first estimate for Q3 GDP growth, and we finally get that bar from Q3 of 2020 out of there, when GDP grew like 35% on a quarterly basis, so that'll finally be gone and stop distorting how this chart actually looks. But even still, even with that obstacle, you're not sneaking anything past the apes here at the Daily Peel Global Headquarters. So, along with the updated kind of revisions to quarterly growth, we're also getting an annual update. So this is the time of year when the BEA looks back over the past 5 years and uses all their updated data to adjust their GDP estimates for the growth periods, going back to Q3 of 2020 once again. Is that 5 years? I think in the report they said, no, that's just what they show in this chart. But in the report, they do say it goes back to 2019, Q2 of 2019. So if my math is correct, that does add up to about 5 years. Now, if you look at these charts, do you notice that difference? Do you notice the difference that I'm talking about here? I hope that the chart is visible to you guys at this point in the video. I don't know if it's going to be. But do you notice the difference that I'm talking about? Well, if you look at Q2 of 2022, you might notice a slight change. And what is that change? Well, in the first estimate that you see, that's that upper portion of this image, you can see that Q2 2022 was a decline. It was a very slight decline, probably less than 1% at that point. But that has been updated to an actual growth figure in, as far as the latest estimate here. So What does that mean? Well, we all know that Q1 2022 was absolutely a decline in GDP. Now, that was definitely a very rough period for markets, for macro, everything else going on. We don't need to live through that horrific reminder once again. But we thought that Q2 was also a decline as well. What happens when you get 2 quarters in a row of declining GDP growth, of declining real GDP growth? That's the definition of a recession, at least here in the United States, according to the National Bureau of Economic Research. That is how they define a technical recession. Well, so what does that mean now that we just found out that Q2 2022 GDP did not decline, it actually increased? That means there was no recession. And in fact, that means that there hasn't been a recession in the United States since June of 2009. That was when the last recession ended. So we're coming up on 15 years, past 15 years at this point, of pure fucking unadulterated expansion in the U.S. economy. Now, there was a little bit of a hiccup. Of course, Q1 of 2022 was a big one. And, when the economy fucking completely shut down in Q2 of 2020. But still, much better than we had expected. There was no recession, and there hasn't been for the past 15 years, at least according to the technical definition. Now, everything else in this GDP report was honestly pretty fucking boring. It was basically the exact same as the second report. Now, one thing that we did learn is that income, so the earnings that all of you very wise and handsome apes out there made, was actually a little bit better than we anticipated. So disposable personal income grew about 5%. It's 1.4% higher than we had anticipated previously. Real disposable personal income appreciated 2.5%, again 1.4%, higher than we had thought, according to the second estimate. So incomes were looking a lot better, and inflation remained at that 2.5% rate. So that's where you get that spread between obviously current dollar and real disposable personal incomes. By the way, disposable personal incomes also factors in taxes there too. That's what they mean by disposable. So this is after tax and after inflation earnings. Consider it like your EBIT, but on a personal basis at this point. So once again, we got, so the incomes that we earned was actually a little bit better. We'll find out if our spending was a little bit better tomorrow as well. But if we look at the industry breakdown of the GDP report, we can see that it's basically the exact same that they reported in the second estimate. Now, if we go ahead and take a look at what these industries are, it's positive to see things like non-durable goods and manufacturing leading the way. That's kind of a somewhat consumer-oriented field. It shows strength in the underlying consumer. It's, good for the goods sector. And we know from the retail sales report that services have been completely dominating goods for the past ever. But the second leading industry remained the same, finance and insurance. Shout out to all of you apes out there for carrying the entire team on that one. But then if we start to kind of break it down a little bit further, we can see that the declining sectors, the declining industries are actually very consumer oriented as well. The furthest declining industry was accommodation and food services. I mean, that's what the Bureau of Economic Analysis calls it. I assume that means hotels and restaurants. That's kind of top of mind what immediately comes there. And that is a very discretionary spending item. So if we're seeing a retreat on that, that means consumers are having to budget a little bit more. And that means that spending may retreat a little bit. Either way, it just means that consumers aren't as comfortable with their finances. Based on the data that we got from the sentiment reports over the past couple of days, that certainly tracks with what we were expecting there. But if we go ahead and take a little bit of a further look, we can see that durable goods manufacturing was one of the leading sectors in the second quarter. But yesterday, we also happened to get the durable goods report for the month of August. Now, it might have been strong in the second quarter, but here coming into the third quarter, not looking so hot so far. Now, we did get a 9.9% rise in July, but that was after a very not so nice 6.9% decline in June. So 9.9% is the only reading that we've gotten before yesterday for the second quarter of this year. And August, how much did new orders grow for durable goods? Not at all. 0.0%, a blisteringly boring growth rate if you ask me, but there's basically no change whatsoever. Consumer-centric durable goods, if we look at things like computers and computer parts, electronics, most of these grew pretty healthily, motor vehicles and parts, all that different kind of stuff. If we exclude transportation, total new orders grew 0.5%. So overall, not terrible, but definitely giving us reason for concern. So that's kind of the big macro story of the day here today. Again, not really anything groundbreaking, but just kind of confirming our priors at the very least, that GDP growth was a little bit stronger than we had anticipated, and there is reason to be concerned about consumer spending going forward. But today's PCE report should kind of clear that up if consumer spending is declining by as much as we think. All right, let's go ahead and move into some of our big stock movers of the day. First and foremost, every other company needs to send Micron a check because they absolutely carried the team here on Thursday. The stock was up 14.73% after reporting its third quarter earnings. The company came in, absolutely crushed estimates. They reported a 93% jump in annual sales to $7.75 billion. They earned $1.18 per share on that revenue. That was up 90% on a quarterly basis, whereas that 93% jump was annual. Net income up 90% quarterly, and that's from a loss in the third quarter of 2023, so very strong, completely humiliated analyst estimates. The key phrase in the report was, quote, robust AI demand. So it's not just NVIDIA that's getting all this credit for artificial intelligence boom anymore. Micron, they make storage products, so this is better for kind of inference training, and as we move out of pure just LLM model training and get into inference so that these things can actually do something useful besides just give us recipes or help us cheat our way through exams, as you know they should be used to do that kind of stuff. But the company is also guiding for better outlook going into the next quarter. They're expecting about $8.7 billion in sales against a market estimate for $8.3 billion. So once again, setting shares up 14.73% on the day. Southwest Airlines also had a hell of a day as well. Shares took off, rising 5.42%. Sometimes all you really need is a bit of a stern talking to, and that is exactly what Southwest has gotten for pretty much all of 2024 so far. Elliott Management has come in and tried to body Southwest management out of their cushy, executive seats or whatever you want to call it. The airline is very much fighting this activist pressure. Now, there were rumors that the CEO and the chairman of the board had agreed to step down at the end of the year. We'll see if that actually goes through, because it seems like the company is already turning things around. The reason that shares were up 5.42% yesterday is because they came out with a new announcement for their expectations of the third quarter. They're expecting Q3 unit revenue, so this is revenue per seat passenger mile, I believe is what that unit would be referring to, is now expected to come in about 3% higher. So the unit economics are going to be looking a little bit better. This is largely because Southwest has chopped a lot of losing they've chopped a lot of their routes that were losing money, especially given that there is a drastic shortage of Boeing 737 MAX 9s. This is this is great for smaller flights, think your, DC to Boston, New York to Baltimore, or anything like that. God help anybody on a flight from New York to Baltimore. But still, those kind of flights that these are good for, and Southwest has kind of ditched a lot of those, and that's why they're improving their unit economics. But the company also approved a $2.5 billion share buyback, probably to put a smile on investors' faces. And if anything, with Elliott, comes down to a vote to try to buy their investor base onto the corporate side of things and just get Elliott the fuck out of there. But again, up 5.42% on the day. All right, moving into our stinky, rotten movers of the day. First and foremost, Jesus Christ, this was a rough one to watch. Anybody running or kind of chasing the artificial intelligence wave, you probably had a rough day yesterday, because one of the leaders in that sector was down at 12.17%. Now, super microcomputers, they woke up on the right side of the bed yesterday morning. Now, shares were up in the early session, kind of early in the morning, but then around 10:30 in the morning, the Department of Justice said, absolutely not, definitely not on my watch. So, already this year, earlier this month, on August 27th or so, right around when the company had delayed its 10K filing for the year, stock serial killer Hindenburg Research published an absolute book alleging accounting manipulation, sibling self-dealing, and sanctions evasion out of this AI high flyer. Super Microcomputers, of course, denies all of those allegations, but they still haven't filed their 10K because of, they're not sure if internal controls were robust enough, aka they probably committed fraud, and that's why they are delaying their 10K as much as possible. Now they have the DOJ's attention, and in lieu of a lawsuit, the market is absolutely pummeling this stock. Once again, down 12.17% on the day. Finally, we have Sonos. This stock was down 4.45%. Nothing but bad news for this company here today. They're racking up the haters on the session, and the biggest hater of the day was, of course, Morgan Stanley. So, for a little bit of backstory, back in May of this year, Sonos thought they were going to be fucking cool and redesign their app to make it a little bit better. Well, it completely sucks. Morgan Stanley certainly thinks so. The bank double downgraded shares, so that means it went from a hold to a very much a sell. I guess Morgan Stanley uses 5 tiers of ratings, but to make it a little bit simpler, we can imagine that they're buy, hold, and sell. If they had it at a buy rating, a downgrade would be bringing it to hold, a double downgrade is bringing it to sell. And that's exactly what Morgan Stanley did. they are now recommending a sell of this stock. They completely massacred their price target from $24 per share to $11 per share. Now, the stock closed on Wednesday at about $12.19. That's a 110% return reversal in their opinion, in their projection going forward from Wednesday's close. Instead of expecting 98% upside from this firm, they are now pricing for about 12% downside, all because this app redesign looks like the fucking TMU version of Spotify if it was in George Orwell's 1984. That's kind of what it looks like. Go download the app, check it out, and you'll see exactly how right I am. All right, let's go ahead and move into our final story of the day. Thought Banana, we're going to get meta here. Now, when I say getting meta, I don't mean in that like cringe way where we talk about whatever's going on. I'm talking about getting meta products, Mr. Mark Zuckerberg himself. This is a huge day for anybody who never plans on reproducing, doesn't want to pass along their genetics. I probably could have used this before getting my girlfriend pregnant, but nonetheless, it's a huge day for anybody that doesn't want to pass on their genetics. Now, following in the footsteps of their way kind of cooler, older sibling, Apple, and how they do their WWDC and how they do their big product announcement in the beginning of September every year, Meta decided to dick ride Apple and effectively do the exact same thing. So Zuckerberg's empire came out earlier this week and was announcing a whole ton of products. Now, taking a step back for a quick second, before we get into the actual products themselves, this company is investing upwards of $40 billion in capital expenditures each year into artificial intelligence and its other high-tech segments. Now, most of this investment is going into a part of the business that's called Reality Labs. This is basically their AR, VR, meets AI segment. It's like those fucking birth control headsets and shit that they put on everybody. Now, they came out, and most of these announcements are from the Reality Labs segment, but you know, most of the time, like when a company like Apple releases this stuff, unless their products are like complete dog shit, the stock's going to be rising during that period just because investors are, you know, relatively bullish on the tech upgrade cycle. They're, you know, anticipating that customers will want to come and buy Apple's new products. Meta doesn't have that gravitas just yet, so it hasn't earned that trust among investors. And if we look at the actual financials of Meta's Reality Labs, it's not looking too great. We're not even diving deep into their financials. All you have to do is look at top-line revenue. In 2021, Reality Labs generated $2.274 billion in top-line revenue. In 2022, that had declined to $2.159 billion, and in 2023, it was $1.896 billion. So Reality Labs has, you know, since Meta actually split this off as a new reporting segment, revenue has declined 17.8% over the 2 years of that period. So obviously, investors are very excited. They want to see some kind of a payoff for this billions and billions of dollars, and declining revenue definitely is not that. Now, some of the announcements that they made, easily the coolest and arguably the only one worth talking about, is their Orion AR glasses. Now, these AR glasses, they are great. If you are a hipster anywhere from Brooklyn to the other side of Brooklyn, you're probably going to absolutely love these things. Everybody else, normal human beings, are going to be like, you know, maybe make it look like something that somebody would want to have sex with me if they saw me wearing it, but they absolutely won't. Go ahead and take a look at the picture that's in the edition if it's not included in the video here next to me at this point, but go ahead and check it out because trust me, you're not going to like this whatsoever, and it's pretty ugly looking. But nonetheless, the glasses do some pretty cool things. Now, they allow you to do things like project holograms, talk to the glasses, you can do video calls, read text messages, you could look at your fridge and say, you know, looking at all this stuff, make me a fucking recipe or something to eat. That's the actual example that the company gave along with the announcement, which, like, if that's the best you can do, I mean, we're going to need to see a lot of improvements here, but this was the only kind of, like, newfangled product that they announced. Everything else is basically an improvement on things that they already have in the works. But the thing is, these glasses, they're not even available for sale yet, and we didn't really get much of an indication of when they will be. They certainly won't be around in time for the holidays of this year. But still, once the tech kind of upgrades and gets to a certain point where these things can actually look cool like normal people glasses, like, do I have any? Like, if they can, here, let me see if I can put these on. If they can make me look as sick as I do when I put on my blue light glasses here that definitely work and weren't just a complete scam on Amazon, they can look as sick as I do with this and pretend that glare isn't there. They can look as cool as I do like this, I'll go ahead and buy the product. But if it's going to make me look like fucking virgin from the 1940s, I'm all good on that. I don't need to look any more like that, to be honest with you. Okay, some of the other products that they announced so that we can stop shitting on these glasses. The Meta Quest 3S. This is the latest version of their AR/VR headset product. Now, this is kind of a lower end version. This is an entry-level model. It's priced at about $300 per unit, so much lower than some of the $800 and $900 ones that they also offer. Now, Meta is getting rid of their old Quest model, so at this point it's only going to be the 3S and the 3S, whatever it's called, like the higher end version, the 3S Plus, Max, Super, Premium, whatever the fuck you want to call it. Every other model is getting 86 at this point, so they're kind of forcing you to upgrade because they're not going to be selling those older units anymore. And why would they? Because they're already at a... They like, a lot of the time what companies will do is they'll use their older products and kind of turn those into like the entry-level versions. Meta's not doing that here. They are creating a new product for that entry-level version and writing off all of their old inventory that they, unless they sell it all by the end of this year. That's what they're either going to do. They're either going to sell through all the old Meta Quests or just completely write them off going into 2025. We also got an update on Meta Ray-Bans. Now, this is really just adding artificial intelligence features. These sunglasses do actually look pretty cool. This is something that I would buy if I had any money at all. But, of course, absolutely do not. But this is still something that I would consider purchasing at least. Now, some of the improvements that it made was to speech and understanding, kind of like, if you use Siri on iOS 18, like, it's a lot better. It's a little bit similar for this. There's now like an inbuilt assistant, like the Hey Meta thing is supposed to be a lot better. The ability to do things like set reminders, I guess, is new, even though that seems like it would be pretty easy. And there's also improved real-time language translation, which is actually a pretty sick thing. But in my experience, a lot of the time that I've had to talk to people that don't speak English, it's oftentimes over the phone. And so that would be a little bit of a conflict right there. But hey, never say never. Maybe it's something you could put on speaker and read the closed captions on your sunglasses. Okay. Finally, they made some updates to just their Meta AI product. Basically, it's equipped with voice options now, and you can actually get it to talk in the voice of celebrities, like John Cena was one of them. Keegan-Michael-Key was another one of them. Oh my god, that would be so funny to have Keegan-Michael-Key and just come up with your own, like, what was the old Key and Peele video with the college football names like 𝗪𝗏𝗪𝗀 and all that stuff? You could come up with your own ones and have Keegan-Michael-Key announce it just like in that video. Absolutely hysterical possibilities with that. Awkwafina was another one, a bunch of these other celebrities. Meta AI is very promising. You can use it to edit photos, videos in the app. It can describe images. You can remove things from the background. You can change the clothes that you're wearing, take the clothes that you're wearing off. I don't give a shit. No rules whatsoever. But that is what we're seeing in terms of updates from Meta. So, once again, no breakthrough technologies, really just kind of an update progressing a little bit further, but this was absolutely not the breakthrough moment that the company needs going forward. Now, when the technology is good enough, when you can get these glasses and these AR/VR products a little bit smaller and make sure that people actually want to have sex with you when you're wearing this stuff, because that's really going to be the key, then at that point, this stuff could probably take off. But it's going to be a long road until we get there. $40 billion per year. Hopefully they can do it within the next couple of fiscal years, or investors might fucking revolt like the Taiping Rebellion. So we'll see exactly what's going on, but that's kind of your update for the day. Thank you all for joining us here once again on this beautiful Thursday. It is now 8:14 p.m. I'm going to go ahead and hit the absolute shit out of the sack. Meanwhile, you guys, happy investing, happy trading, and we'll see you soon. Bye now.